Hello traders, and welcome back to Explain the Charts. Today, June 18th, 2025, we're going to analyze USDCAD, combining the latest news with technical chart analysis to give you a complete trading picture. Recent news indicates that the US dollar to Canadian dollar pair is experiencing mixed signals. We're seeing that the pair is holding gains ahead of the Fed meeting, with downside attempts limited around 1.3650. Rising crude oil prices, driven by Middle East tensions, are supporting the Canadian dollar, as Canada is a major oil exporter. This creates conflicting forces on the USDCAD pair. Let's start with the daily chart to get a long-term perspective. Looking at the daily chart, we can see a lot of volatility and downward spikes throughout the past year. We've had lows around 1.30 and highs above 1.45 throughout this year. The price is currently around 1.37168 as of June 18, 2025. Zooming in on the 1-hour chart, we can get a clearer picture of the more recent price action. We'll narrow our focus to the last few days. The 1-hour chart reveals a choppy trading environment with some attempts to break higher. I'm going to look closer at June 16th and 17th. Looking at the 15-minute chart for a closer look at June 17th, it shows consolidation around the 1.368 level, followed by a retracement. There was a brief period of consolidation, then a surge higher, and it's been consolidating lower since. There might be support around 1.357. Given the Fed's expected unchanged interest rates, as reported in the news, and ongoing geopolitical tensions, we can expect continued volatility in the short term. Traders should watch for a potential breakout above 1.3700, which could signal a bullish continuation, or a breakdown below 1.3650, which could lead to further downside. In the short term, a break above 1.3700 could lead to a test of higher resistance levels, while a break below 1.3650 may trigger a move towards 1.3600. These are the key levels to watch based on today's data and the information presented. In the long term, the divergence in monetary policy between the Bank of Canada and the Federal Reserve will likely play a significant role. The Bank of Canada continuing its easing cycle faster than the Fed could pressure the Canadian dollar, leading to a longer-term bullish trend for USDCAD. To recap, watch for these levels. Support around 1.3650 and resistance near 1.3700 in the short term. A break of either level could define the next move. Long term, the diverging monetary policies and geopolitical tensions will contribute to the overall trend. The most likely scenario is continued choppy trading with a slight bullish bias, but stay nimble and react to the incoming news and data. Good luck and happy trading! Don't forget to like and subscribe to Explain the Charts for more in-depth analyses.